keeping the shares of a great company over decades is probably the best way to compound wealth. Let's go through the history of his top 10 investments and see what we can learn. He's selling almost all of his positions in the last quarter, except for 3 companies. Hello friends, today we are going to take a look at David Rolfe's US stock portfolio. In the last 30 years, he achieved a result of 12.4% annually, and at the same time the S&P 500 result was 10.2%. You may think, oh, it's just 2.2% better, no big deal. But to put that into perspective, let's do some simple calculations. If you would put $1,000 into the S&P 500 30 years ago, and at the same time you would give Dave Rolfe $1,000 to invest, now you would get from the S&P 500 $18,426. That is very nice. But Wedgwood Partners, run by David Rolfe, would make you $33,341. That is a difference of almost $15,000 from an investment of $1,000. 2.2% in 30 years creates a huge difference thanks to compounding. So let's see, how did David Rolfe achieve those results? Currently, he has 20 stocks in his US portfolio. So let's go through the history of his top 10 investments and see what we can learn. Let's start with his 10th biggest position, and it is United Health Group. It makes up 5.35% of his portfolio, and last quarter he reduced this position by 1.89%. United Health Group is an American multinational health insurance and services company. David Rolfe bought his first shares in Q3 2021 for around $390. He slowly added to this position, and we see that when the price fell in Q1 2023, he added in a substantial way, and when the price hit around $500, he sold almost 32%. His 9th biggest position is Motorola Solutions. It makes up 5.52% of his portfolio, and last quarter he reduced this position by 23.27%. Motorola Solutions manufactures public safety radio systems, body cameras, and security surveillance systems. David Rolfe bought his first shares in Q2 2019 for something close to $160. He reduced his position by around 20% in Q1 2020 when the price started to go down. So it's hard to say, did he sell before it went down, or was he late and was it just a mistake? But after that, he started to add to this position again, and when the price hit its peak in Q4 2021, he sold another 20%. Now we see that the price is well over $300, and for the last 2 quarters, he's selling big chunks of his position. So it's interesting, will he go to zero and just make a lot of money on this investment, or will he keep some of the shares, which would indicate that he still believes that there is more possibility of growth for this company? And his 8th biggest position is Copart Inc. It makes up 5.59% of his portfolio, and last quarter he reduced this position by 2.26%. Copart is a global provider of online vehicle auction and remarketing services to automotive resellers. David Rolfe bought his first shares in Q4 2019 for around $22. And yet again, we see that he sold a lot of shares in Q1 2020. So probably for some reason he needed cash. And that is why this is another position that he had to sell, even though the price was down. And it's a similar story. Through the years, he builds it up back again, and now that the price is around $50, he's selling. And in Q3 2023, he sold over 23% of his position. So it is a very nice investment for him. His seventh biggest position is Microsoft. It makes up 6.13% of his portfolio, and last quarter he reduced this position by 2.67%. David Rolfe bought his first shares in Q1 2020 for something close to $157. And just half a year later, he almost doubled this position, and the price back then was around $200. He was selling a small amount of shares while the price was going up, and we see that when the price was down, he actually tried to keep it pretty steady. He added in some quarters, then he sold a bit, and yet again, half a year ago, he sold almost 35% of this company when the price was around $315. And his sixth biggest position is PayPal Holdings. It makes up 6.39% of his portfolio, and last quarter he added to this position 49.1%. David Rolfe bought his first shares in Q3 2015 for $31. And he made some small changes while the price was going up, and in Q4 2017 he sold over 60% of the shares for around $73. And we can see that through the years he made this position smaller and smaller, especially when the price was skyrocketing to almost $300. And now that the price is back down to under $60, he is slowly building this position back up. And this is the first of just two positions in his top 10 that he actually added to in the last quarter. So now we get to the top 5, and we start with Taiwan Semiconductor Manufacturing Company. It makes up 6.94% of his portfolio, and last quarter he reduced this position by 2.78%. Taiwan Semiconductor Manufacturing Company makes about 90% of the world's most advanced computer chips, so they are an absolute leader in the industry. David Rolfe bought his first shares in Q2 2021 when the price was around $120. He added to this position every quarter when the price was falling down. And yet again, half a year ago, he sold a meaningful part of his shares, over 21% of them. It also looks like that was the time when he needed some cash, and that is why in so many investments we see that he was selling, even if the price was not at its highest point, like in case of Taiwan Semiconductor Manufacturing Company. In fourth place, we see Apple. It makes up 7.03% of his portfolio, and last quarter he reduced this position by 2.59%. We don't have all the data to track this investment before Q4 2011, but what we do know is that David Rolfe invested in Apple for the first time in 2005, and at that time one share of Apple was below $2. But he really made this investment big at the end of 2012 and the beginning of 2013, when the price was around $15. And through the years, he was selling the shares. At the highest point in 2014, he owned almost 27 million shares of Apple. Right now, he owns 180,000 shares. So if he just kept the shares, they would be worth something close to $5 billion. Currently, his entire US stock portfolio is worth $500 million. But it just shows how hard it is not to lock in the gains. How can we convince ourselves not to sell when the stock is skyrocketing? And of course, we have to take into consideration the fact that he is running a fund and he cannot allow one position to be so dominant. If we look at the way his portfolio is structured, he is trying to keep even the biggest position under 10%. And now we get to the podium places. His third biggest position is Visa. It makes up 7.73% of his portfolio, and last quarter he added to this position 12.1%. And yet again, we have data only since Q4 2011. But we know that he bought his first shares at the end of 2008, when the price was close to $13. It is a very similar story to his Apple investment. He sold through the years most of his shares, making a beautiful profit on the way. And in 2014, he owned almost 4.5 million shares of Visa. That would be worth over $1.2 billion right now, so over twice as much as his entire US stock portfolio. And I understand that when you are running a fund, then you have to take into consideration a lot more factors. But if we are managing our own money, we can be much more flexible with our portfolio structure. And it is another example that shows that keeping the shares of a great company over decades is probably the best way to compound wealth. His second biggest position is Alphabet. It makes up 8.29% of his portfolio, and last quarter he reduced this position by 2.85%. Alphabet is, of course, a parent company of Google and all its subsidiaries. And another similar story. Again, we have data since Q4 2011, but we know that he bought his first shares in 2007 for around $15. He was increasing his position till Q2 2015 when he owned over 8.5 million shares. That would be worth today something close to $1.2 billion. And that way we get to David Rolfe's biggest position, and it is Meta Platforms. It makes up 9.89% of his portfolio, and last quarter he reduced this position by 26.27%. Meta Platforms is a parent company of Facebook, Instagram, and WhatsApp. David Rolfe bought his first shares in Q1 2018 for around $160. He was reducing this position through the years, and as we can see, when the price fell substantially from $336 to just over $200, he added almost 40% in half a year. And now that the price is over $460, he is selling his shares quite rapidly. I think it is mainly because he wants to keep his position under 10% of his portfolio. There are a number of things that stand out when we look at the history of his 10 biggest investments. First is the fact that because he does not want to, or maybe he cannot, have any position bigger than 10%, he had to sell some great companies. And his results would be out of this world if he just kept them. So that can be a great lesson for us. Like Peter Lynch used to say, selling your winners and holding your losers is like cutting the flowers and watering the weeds. So we should just hold those great companies. But it is so hard not to sell when things are going really well. If you are up 100% from your investment, that feels great. If you are up 200, that is fantastic. If you made a 500% return on your investment, how strong must your belief be in this company's greatness to convince yourself not to sell? That is an art in itself. Second thing is a bit related to my first takeaway, and that is the quality of the companies. David Rolfe is investing only in really great businesses. He's not trying to make money by investing in poor companies that are just very cheap, but instead he tries to buy great companies at fair value. So something that Charlie Munger and Warren Buffett has been trying to teach us for many years. And finally, I see a very interesting pattern. He's selling almost all of his positions in the last quarter, except for 3 companies. He added to his 14th position, which is Edwards Lifesciences Corporation, and in the top 10, he added to only 2 positions. It is PayPal and Visa. And I analyzed both of those companies not that long ago, and they seem pretty nicely priced. Especially PayPal is very cheap right now. And of course, if you want to find out which of the companies we analyzed on this channel are the cheapest ones, then head over to our Patreon page and get access to the stock ranking or the stock ranking pro to get an even better understanding of those companies. So it seems that David Rolfe believes that Visa and PayPal are a buy at the current time. But also, I don't think it is a coincidence that both of those companies process payments. Therefore, it is probably also a bet on the entire industry. If you like this video, then you may also enjoy my analysis of Lee Ainsley or David Tepper stock portfolio. Thank you so much for watching and see you in the next one.